Well, greetings to all my investment clients. My name is Walter Mazers, your wealth manager, CPA tax advisor. I'm recording this on Sunday, March 1st, kind of late in the evening, busy day, tax season. But as always, just want to make aware of this disclosure and to my clients, and especially anyone watching other than my clients. This is not intended as investment advice or a solicitation to buy or sell any securities. Please seek investment advice from your current investment advisor. And at your leisure, you can stop the video and get more disclosure about Trinity Wealth Solutions or Walter Mazers by going to this website, brokercheckfinra.org. Okay, so that we got that out of the way, as I mentioned last presentation, I will be doing kind of a overall economic geopolitical view. As probably all of you know, there was a major event that happened. U.S. and Israel did strikes on Iran. So that makes markets jittery, and that's kind of what I'm going to cover. What does that mean? So breaking news on March 1st, the strike by United States and Israel on Iran. What happened in the Middle East and what it means for your money. I'm going to try to do a simple, plain English guide. No jargon, just the facts that matter to you. So I don't want to get political, whether this was a right decision, wrong decision, conservative, liberal. That I'm going to leave to the politicians and other people debate. My focus is, this is the cards we were dealt, and what does that mean to your money? What does it mean to the stock market? We can't undo what was done, but we can control going forward how to react to this and how to properly structure your portfolio so you don't suffer losses. So what happened this weekend? U.S. and Israel attacked Iran. On Saturday morning, February 28th, the United States military and Israel launched a massive coordinated attack on Iran, the largest U.S. military operation in the Middle East since the Iraq War in 2023. Iran's supreme leader was killed. Iran's top leader, Ayatollah Khamenei, if I'm pronouncing that right, I'm not sure, who had ruled Iran for 35 years, was killed in the strikes. Think of this as the equivalent of losing a president and a pope at the same time. This is once in a generation. I'm not sure if I would equate that to, unfortunately, Ayatollah was a tyrant, to be blunt. He killed a lot of his own people. So, again, I don't want to debate whether it's right or wrong. The facts are facts. It happened, and how's that going to affect pretty much your life and portfolio? Iran struck back, hitting 7 countries. Iran blocked the world's most important oil route. Iran closed the Strait of Hormuz, a narrow waterway where 20% of the world's oil supply passes through every single day. Think of this as the world's oil pipeline suddenly being shut off. So again, that's going to impact, and already did, oil prices. So stock market, negative reaction, doesn't surprise me. In simple terms, markets do not like war or uncertainty. Here's what's happening to the main areas where your money may be invested. Now, remember, we're out of the market, completely out of the market. So your money is safe. We didn't, portfolios really had no reaction because we're sitting in U.S. Treasury bills, short term, and cash. So safe and sound, no better security than being invested partially in U.S. Treasury bills. So stock market is down, and I'm recording this on Sunday, so Dow futures, S&P 500 is showing it's going to be Monday. It's going to open 1% down before markets even open Monday morning. That's a loss of roughly $300 billion. Oil, gas and oil, of course, oil prices are rising fast, which means gas at the pump will cost more soon. How soon? We don't know. Oil jumped over 5% just in weekend trading. If Middle East routes stay closed, experts say gas prices could spike significantly in the coming weeks. Gold and precious metals are doing extremely well. Gold and traditional safe money is going up. People they rush to gold when there's uncertainty or they're scared. So gold was at 5,297 before the attack. After the attack, it surged, pushing 55,400, a gain of over $100 per ounce in a single weekend. We may be getting back into gold position. Remember, we got out because there was too much uncertainty in everything. But now with the strike, we may be getting back into precious metals, specifically gold. Saving bonds, U.S. savings bonds and U.S. government bonds are considered very safe right now. In a crisis, money flows into safe, stable investments. U.S. Treasury bonds actually gained in value. Investors sought safety. Think of the stock market like a weather vane. It instantly shows which way the wind is blowing. Right now, the wind is blowing toward caution and safety. So momentum is shifting. In plain English, the momentum is shifting down. S&P 500 is showing it's going to open 1% down. Dow Jones, which is the top 30 major U.S. companies, showing it's going to be down 1.2%. And NASDAQ, which is predominantly tech-heavy index, is showing to be down 1% on Monday. Who gets hurt in the stock market? Airlines, jet fuel, tech companies. Investors get nervous, sell growth stocks. Retailers, people buy less when worried about the economy. Car companies, higher energy costs, higher production costs. Who benefits in the stock market? Oil and energy companies, higher oil, bigger profits. Defense companies, weapons are in demand right now. Gold mining companies, gold price rising, more revenue. And utility companies, people still pay electric bills in crisis. So you don't have to own oil stocks for this to affect you. Higher oil prices mean higher gas prices, higher gross bills. Food gets shipped and higher heating costs. This is about everyday life, not just Wall Street. So the Strait of Hormuz, why everyone is worried, imagining single bridge. Again, it's a gateway from the Middle East of oil to be shipped to the around the world. And that 20%, that's a huge loss of oil and gas, production. So gas prices may spike. Nobody knows. I mean, the predictions are it could go $75 to $85 per barrel, but that's on the news. So again, news, you have to be careful in getting excited and chasing certain sectors which are very short-lived based on news. If this conflict gets resolved, within a week or two, oil prices are going to drop like a rock. So, I mean, there's many predictions. Again, if the blockade continues, it could spike to 90 to 100. And then worst case scenario, 100 to 120. Again, I don't give much credence to these predictions. We just have to wait, watch, and see what happens. Gold, the world's panic button. When people get scared, they buy gold. Gold has been a store of value for thousands of years. Right now, people all over the world are hitting the panic button. What does that mean? Supply and demand. It's that simple. If people start to, remember, money always moves out of one sector into something. So if it's moving out of the stock market, it's got to go somewhere. And that somewhere right now probably is gold. So short-term momentum for gold, it could hit 5,400. It could hit 5,600. And what does it mean to you? If you own gold, physical gold, in your IRA, you are benefiting right now. Gold is one of the few things going up. If you think about buying gold, again, we may be getting into gold's all-time high, 5,595. It could push toward new records if tensions continue. However, if a peace deal happens quickly, gold could give back some gains. So gold is already, important to remind, gold is already risen 22% in 2026. Remember, we had exposure to gold from beginning of the year, and we got out, I believe, on February 20th. So we captured a lot of the upside. So again, we may be getting back into gold. What should you do right now? The important thing, don't panic. History shows that markets have survived every war, every crisis, every scary headline, and recovered here. Here is our guidance. Again, because we are out of the market, so I feel very safe, comfortable telling you that your money is safe. The one area that we may get into is in, as I said, precious metals. So again, stay calm. Don't make emotional decisions. Again, that also is message for me. I don't want to get emotional with your money. Understand this is temporary uncertainty. Check your portfolio is properly diverse. That's my job. So I'm monitoring your portfolios and contact us before it. Obviously, I manage your money, so there's no need to contact me, or you're not going to make changes. You're relying on the money that we're managing. But for those who have 401ks or IRAs, again, if you want to call me and say, hey, what do you think? Where's my money? Should I be doing something? No one can predict exactly how this will unfold, not even the best Wall Street analysts. But here are three most likely paths in plain English. About 30% likely. Trump and Iran began negotiations. Oil routine. Hormuz reopens, oil prices drop back down, stock market recovers quickly, gold gives back more of its gains. Scenario 2, about 40% likely. Talks happen slowly while fighting continues. Oil route partially blocked for weeks. Gas prices rise and stay higher for a while. Stock market stays choppy and uncertain. Gold holds its gain and moves higher. About 25% likely. More countries get drawn into conflict. Oil route stays closed for months. Inflation spikes. Everything costs more. Stock market drops significantly, 10% or more. Gold could surge to new all-time highs. So, again, this is a prediction. Nobody can tell the future. These are just probabilities. Which one is going to come to fruition? Flip a coin. The bottom line, a major war has started in the Middle East. This is not a small skirmish. The U.S. directly attacked Iran and killed its top leader. This is the biggest military event in region over 20 years. So the market is nervous, but not in free fall. The most dangerous thing you can do is panic. Oil and gas prices are going up. Gold is the winner right now. We are here to help you navigate through this. So again, my job is to make decisions on your behalf with your money. And like I said, right now we're sitting safe and sound. And the only thing I may be considering, maybe on Monday, is getting back into gold. So if you have questions about your specific situation, you have two offices, Sterling Heights, Bloomfield. Email us. I have a radio show on WNCK 690, 680 every Saturday from 8 to 9. 8 to 8:30 is in English. 8:30 to 9 is in Polish. And give me a call if you still, have some uncertainties whether about the portfolio we're managing or any other monies that we are not managing, I'd be more than happy to sit down with you and or go over your portfolio that we are not managing. So that's kind of, call it the crisis. Let's look at the actual stock market. And again, remember, we are out of the market completely. We are in U.S. Treasuries, short term, and some cash, just waiting for the reason we're sitting in cash, because I want to leave some money in cash to deploy quickly back into potentially gold. So if we look at the chart, again, we're comparing long duration bonds, the broad market, gold, and technology. So if we're looking at 1 month, we can see the market has just been choppy. It's been treading water, as we say, and actually it's down. Broad market is down. Actually, technology almost 3%, and the broad market almost 2%. Actually, long duration bonds have done better than the stock market, and obviously gold did extremely well. And if we look at a longer chart, this is 6 months. So remember, there was that big drop in gold, almost 20%, which is very unusual. And then it started to go back up. I was kind of choppy, went up, went down, and then right here, we got out right here. Now, the trend is looking like it wants to continue moving up. So that's why we probably, again, I'm not sure, but by Monday, I'll make a decision whether we get back into gold, because it could push much, much higher. So let's take a look at interest rates, what they're doing. Give me 1 second. So here, this is a 20-year long-term Treasury bond, 1 year. As you can see, right here for the last, since November, it's been kind of treading water, but it's starting to have a trend line down. And this is where, if it continues, we may be getting into long duration bonds. Why? When interest rates go down, long duration bonds have phenomenal rates of return. What's going to cause interest rates to go down? Well, if the economy starts to tank, and we're seeing that there's definitely a slowdown, the Federal Reserve is going to lower interest rates, and that means if they continue, then long duration bonds will be a great opportunity to get into and make some more money with a lot less risk for our clients. We did that back in 2020, I believe, when COVID and interest rates were they were pushing lower. So this is what we want to see interest rates do. As you can see, this was 20, after COVID, and then interest rates started to go back up. So this was the opportunity right here. So we need to see that trend line. It's starting to go down, not yet. So stay tuned. We'll just have to see what happens. So again, no reason to worry and be calm. As I said, I can only control things that I can control. The political aspect, debate, whether this was the right thing to do, at this point, that doesn't matter. What matters is how we react to our reality, the cards that we've been dealt, and how can we protect your portfolio, and then potentially that creates some opportunities to make money for my clients. So thank you for watching. Hope you enjoyed the video. If you have any questions or concerns, if you want to further discuss this with me, please give me a call directly on my cell, 586-873-8156. Thank you. Have a great, well, I was going to say have a great weekend, but it is the end of the weekend. So have a great week, and we'll see you next week. Take care. Bye now.